Hello and welcome. My name is Melissa Galasso, and I'm excited to be here today to talk to you about the most recent ASU issued by the FASB, which is ASU 2019-08. It impacts two different topics, Topic 718, which is compensation, and in particular stock compensation, as well as Topic 606, revenue from contracts with customers. So this was issued in November of 2019, and the title is Codification Improvements, Share-Based Consideration Payable to a Customer. So that codification improvements is an important concept here. So when we look at codification improvements, they typically are standing projects that the FASB is going through, but they're normally very niche and narrow. And that's exactly what you're going to find from today's topic, is that it's a very niche topic addressing a particular area. So the literature today provides really good guidance on how to account for the income statement impact of payments of stock-based or share-based payments to a customer. And it explicitly tells us to use it as a reduction of revenue under Topic 606. However, it's silent on how to classify awards on the balance sheet, debt or equity, as well as when and what guidance to use in terms of measurement. And so a very, very narrow, very, very niche topic that we're going to be able to address and again, help people with when they're trying to adopt revenue recognition and trying to adopt some of these standards that are a little bit harder to go through, right? So the goal here is to make this easier for everyone. So a little bit of background. Again, this was issued in November of 2019, and it is a standing project, right? So what we know is that they like to try to keep a grouping of them, and normally they issue them all at the same time. However, they didn't do that because they really wanted it to be separate for awareness purposes. So normally once a year, they issue a codifications improvement ASU, and it addresses 100 different areas where they find little issues with GAAP. But when it's impacting one of the major standards like leases or RevRec or even financial instruments, they have now started to tend to issue them separately, even though they are a codification improvement project, simply because they want people to be aware of it and it not to be held up by the issuance of the rest of those topics. So that's really why we have this niche area. So a little bit of background here before we can kind of dive on in. Back in 2018, ASU 2018-07 came out and told us, this was, the title of it was Compensation, Stock Compensation, again, so Topic 718, Improvements to Non-Employee Share-Based Payment Accounting. So prior to ASU 2018-07, we had used Topic 505, and 505 addressed non-employee share-based payment, and 718 addressed employee share-based payment. And what they had originally set out to do was to update the non-employee share-based payment to be as full as employee share-based payment. So if you were to compare the two topics, there was just no comparison. Topic 718 addressed more issues, was much clearer for people to follow, versus when we look at Topic 505, there was a lot of gaps and people were trying to take Topic 718 and figure out how you could use it in Topic 505. So the ASU was issued to provide clarity on how to measure share-based payments to non-employees simply by expanding Topic 718. So they superseded Topic 505 and they expanded Topic 718 to now include both share-based payment to employees as well as non-employees. However, in that ASU, one of the things that they do is they tell us that share-based payment to a customer should be under Topic 606. So when you look, consideration payable to the customer, you could have cash amounts that the entity pays or expects to pay to a customer, credit or other items that can be applied against amounts owed. So that would be something like a discount or rebate or a coupon. And then C are equity instruments granted in conjunction with selling goods or services. So if you are going to use that equity instrument as a response to a selling of good or service, then that would be subject to Topic 606. Well, Topic 606 does a great job providing presentation guidance, but not providing measurement guidance in this area. So because of that, there was a lack of understanding of what we would do. So we could have had a couple of different choices here, right? So they only addressed the income statement side. We knew it was a reduction of revenue, but we weren't sure what the other side of the equation was going to be. And since it really didn't have a lot of it, we could have said it was consideration under Topic 606 and measure it at the contract inception, or and if we did that, Topic 606, it would have been based on the nature of the payment. But we could also have considered Topic 718, and that would be the form of consideration, right? Share-based payment, and then measure it at grant date fair value. And so this was something that was very important, right? Choosing to apply the guidance in 606 related to non-cash consideration was one choice, or choosing to apply it under 718 and measure it at grant date fair value was a very different outcome, and you would get different answers. And so because there wasn't a clear-cut answer, that led to potential diversity in practice, which would have meant we would have had effectively the same concept or the same issue and would have gotten two different outcomes for it. So as a result, they issued this ASU to be a little clearer. So in ASU 2019-08, it requires the entity to measure and to classify share-based payments to a customer using Topic 718. So the reduction to revenue would be measured on the basis of the grant date fair value of the share-based payment. And that's really nice because instead of having multiple dates, you would have just a single grant date. And the grant date is the date at which the grantor, the supplier, and the grantee, the customer, reach a mutual understanding of the key terms and conditions of a share-based payment award. And that classification and subsequent measurement would be under Topic 718, unless obviously there was some type of modification or the grantee was no longer a customer. But that would be the general rules there. So following Topic 718 and handling the grant date fair value. Now, a little bit of a reminder here, I think this is very important. If the consideration payable to a customer is a payment for a distinct good or service from the customer, then you would apply it, then you would follow the same way you would purchases that it accounts for as from a purchase from a supplier. So a great example here is student financial aid, right? If you give someone a scholarship, it is a reduction of the transaction price. But if a student receives work study, right, that's a separate, distinct service from the customer, right? The student is going to work and is being paid to work for you. That would not be a reduction of your revenue, right? That would just be a separate, right, a distinct good or service, and it would be treated as any other purchase from a supplier. You would not be following this guidance. So you always want to make sure that you're looking to see what is the true understanding underlying the agreement, right? So just because they're a customer doesn't mean that they also can't be a supplier as well. All right, so when will this be effective? Well, it depends. It depends on whether you've already adopted ASU 2018-07 or not. So for entities that have not yet adopted ASU 2018-07, we're going to, for public business entities, do fiscal years beginning after December 15, 2019, and interim periods within those fiscal years, right? So when we're doing this, it would be for 2019 starting point, so it'd be 2020 calendar year ends, and then interim periods, however, within 2020. If you are not a public business entity and you have not yet adopted ASU 2018-07, then it would be for fiscal years beginning after December 15, 2019. However, the interim periods would be within fiscal years beginning after December 15, 2020. So as typical for public entities that are not public business entities, you would adopt it first in your annual period and then in your interim periods in the following year. Very standard in terms of the treatment. If you have already adopted, right, so some entities have already adopted ASU 2018-07, then they're going to adopt this for fiscal years beginning after December 15, 2019 as well. However, always the interim periods within those fiscal years because you've already adopted the standard. You can early adopt the standard, but not before you adopt ASU 2018-07. All right, so you all kind of want the basket to come together. All right, excellent. Well, very good job here. So again, my name is Melissa Glasso. It was a pleasure having you on today's Nano Learning, and I hope to see you on a future Nano Learning. Have a great day, guys. Bye-bye.